Welcome everyone. This is JD Biting from Benefactor Group. I'm Vice President and been with the firm for about 12, 13 years now. And it's a pleasure to welcome so many of our friends and clients to this special session. So this is a special invite-only gathering of our clients to really, talk about some important data from last year, from this year, and all of the giving trends that are happening, throughout the country that we're all experiencing. So I'm going to do some introductions, but before I do that, again, great session for you today. I want to give you a quick lay of the land of what to expect over the course of the next 60 minutes. We will start with a brief presentation on the latest Giving USA data, some historic trends, and provide some deeper aspects of what we're experiencing up to today in real time. And then we will have time for some question and answers directly related to that presentation to our presenters. And then in our final time, 20 minutes or so together today, we will break out into smallish groups, each hosted by a senior staff member at Benefactor Group, to dive deeper and to share and to converse and to learn from each other, and then come back together in the final minute just to conclude. So that's what to expect today. And without further ado, let's get started. And we will get started I will introduce two folks at Benefactor. First, we have Laura McDonald. Some of you may know her as the founder and principal of Benefactor Group, but did you also know that she was the past chair of the Giving USA Foundation and author of the Endowment Handbook and avid angler, and of course, has some amazing expertise to share today. And we also have Megan Simmons. And some of you may know her as our brilliant wordsmith and strategist. But did you also know that she is currently the co-chair of the editorial review board of the Giving USA Foundation? And did you know that she's the smartest person at the firm? And I will attest to that. So with that said, and you will also have a chance to meet some other wonderful Benefactor Group folks later in this session. But for now, allow me to pass it over to Laura and Megan.
Thanks, JD. And Megan, I think you are going to get us started walking through some of the data from Giving USA 2025 in particular, and then I'll pick it up and really take a look at how that longitudinally compares with past years and what it might mean for this rather unusual year.
That's great. So Giving USA is a special time of the year for the firm. It is the longest running and certainly the most comprehensive report on charitable giving in the United States. And I think it offers a lot of great benefits, in particular in moments like right now, where it, can offer a baseline. It demonstrates how American philanthropy has responded at other similar moments in our history. So we're going to share some of the headlines from 2024, and then, as Laura said, start to talk about and think about how these larger trends affect the moment that we're currently in. But if we go to the first slide, I'll start with the big headline. In 2024, giving reached $592 billion, which is an increase of 6.3% in current dollars and 3.3% when adjusted for inflation. So this is a new high in current dollars, and actually when adjusted for inflation, it surpasses all other years except for 2021, which remains the best year of giving on record. So giving grew, usually influenced by increases in individual and corporate giving. We know that people give when they feel financially secure, and that was the case in 2024. The economic conditions were generally positive. In current dollars, we saw that the S&P grew more than 20%. Disposable personal income grew, consumer sentiment grew, GDP grew, consumer spending grew, all of that, and inflation returned to a milder rate of 2.9%, which is closer to the 40-year average than it's been in recent years. So then if we break it down on the next slide into starting to think about the sources and uses of those charitable dollars. So on the sources side, we saw that corporate and individual giving saw strong growth. right? So a strong stock market and growth in disposable income meant that, again, individuals felt financially secure. Their giving grew overall by 8.2%. We know that corporate giving is really closely linked to GDP and to corporate pre-tax profits, both of which grew last year. So corporate giving actually reached its all-time high of $44.4 billion. Although it did reach its high, we see that corporate giving continues to average only about 1% of pre-tax profits, though, where it's sort of stagnated for years. So it's at a high, but there's this larger question of its proportional relationship to corporate pre-tax profits. Foundation giving was relatively flat in 2024, perhaps as foundations returned to more normal patterns of giving after stepping up grant-making cycles in response to the pandemic. And bequests declined, but that's, not unusual. We often see large fluctuations year to year when it comes to bequests. It is interesting when we look at the next slide to start to see how these patterns have changed over the longer arc of time. So, as you look at this graph, I'll call it a few things. We can see that individuals clearly are responsible and have been responsible for the lion's share of total giving by far. As a portion of the pie, however, you can see that this segment has started to decrease over time as high net worth individuals transition their giving to perhaps other vehicles like family foundations or DAPs. And as I mentioned on the previous slide, corporate giving is closely tied to pre-tax profits. So when pre-tax profits grow, so does corporate giving. But the pace of growth is much different. Even though pre-tax profits have really taken off in recent years, have really flourished, corporate giving has sort of remained stuck in that 5 to 7% portion of overall giving. And finally, I think a third thing I'd just call out is, like we said, bequests fluctuate year to year, but have largely, over the long arc of time, remained between 7 and 9% of total giving. On the horizon, this could be changing. We've all heard and talked about the great transfer of wealth, right? And we know that over the next 20 years, it's estimated by some accounts that $18 trillion will flow from estates to nonprofit causes. So there's an interesting, possibility on the horizon as we see bequests might start to inch up as a proportion of overall giving. So that is on the sources side. If we go to the next slide, we can start to talk about giving recipients, those who received. And some headlines here. All 9 of our subsectors grew in current dollars. We saw that 3 sectors saw growth exceeding 10%. So public society benefit, international affairs, education. Interestingly, each of these was actually rebounding from slightly weaker growth the year before, but saw significant growth last year. There were 4 other sectors that achieved narrowly inflation-adjusted all-time highs, which would be education, health, arts, and environment animals. We see that when adjusted for inflations, giving to foundations remained relatively flat, and when adjusted for inflation, giving to religion declined. And I'm seeing a couple of questions pop up in the chat.
Couple of them, Megan, I'll go ahead and answer in the chat. And then what I'd suggest is Jesse will bring them to the whole group if we think that it's something that we want to incorporate into our conversation.
Okay, wonderful. So Laura will start to respond to some of those in the chat. Thank you for those good questions. I think the last thing I'd share about Giving USA 2024 data is if we go to the next slide, again, there's some interesting stories we start to see when we look at the changing trends over time. Some of these stories have been on our minds for a while now, right? So religion continues to be our largest recipient of charitable giving, but we know that over time, its share of the pie has decreased in parallel to trends around things like declining religious participation overall. Human services, interestingly, has risen steadily and very, very recently has become now the number 2 recipient of charitable giving. There are other trends we can look at as well. Of, when we look at giving to education, that starts to encompass perhaps gifts that are multidimensional in the causes that they're trying to touch. Gifts to research, for example, a research university might still be counted under our education category. And I offer that we've made note of some of these trends and some other vignettes in our infographic that we love to produce every year. And if you go to the next slide, I'll just share that we have a link here to learn more, to explore some of these vignettes and these stories, and to start getting a little bit more deeply into the details beyond the headlines that we've shared today. I'll pause to see if there's any questions that are been in the chat or that we'd like to raise now for the broader group. Great. Hearing none and seeing, Laura, that you've started to respond with some data in the chat. I'll turn it over to you then to take us into the resilience of giving over time.
And I'll ask maybe then you can go ahead and curate the chat a little bit as I'm talking. And this is also a feature that's available on our website, updated as of today for the newest Giving USA data. And really, what I'm going to do is go through a series of slides that open our aperture even more. So, Megan just talked about primarily Giving USA 2025, which reports on giving in 2024. I'm now going to look back over the long arc of Giving USA to say, what can we learn that might inform our thinking about 2025 and beyond? So, if we go to the first slide, you will see the classic Giving USA chart. This shows how giving takes it all the way back to 1967, which is the earliest data that we have real confidence in, and brings it up to today. And just to orient you, the bars show giving in inflation-adjusted dollars. The line shows giving in current dollars, the world that most of us live in. And what you can take away from this base chart is that since that giving grows, it grows at an average rate of 6.6% a year, 2.5% in when we adjust for inflation. And that, as Megan said, we really saw a high watermark in 2021, which confirms the theory many of us had that the giving economy is elastic, that it's got room for growth if we can find circumstances that really inspire donors, as we did in 20 and 21 when we had the pandemic, calls for racial justice, natural disasters, domestically and internationally. And so we do see that there's room for inflation to grow. And one of the reasons that we know that, if you take a look at the next slide, is that now you'll see that the color of the slides, the colors change for some of the bars. And that's because those are years in which there was a recession. And the thing that we know is that even during a recession, giving tends to grow. It just grows more slowly. So it grows at an average of about 5% per year, even during a recession, relatively flat when adjusted for inflation, because as we'll see, there's a correlation between recessions and inflation. But on the next slide, and this I think is one of the most really bolsters my confidence in charitable giving, because what we see is that in current dollar terms, it has declined by more than 1%, only 5 times since 1967. And two of those declines happened not because of a shaky economy, but because of significant changes in the tax code. So you may be thinking to yourself, we're anticipating a significant change to the tax code. What should I be thinking about for the year ahead? That might be something, if you have questions about that, or something to discuss when we break out into small groups. So you'll see that it was really only those 2 years during the Great Recession that we saw declines. And then we'll point out again, 2021 was an anomaly, an abundant anomaly. And so what we really saw in 22 was not so much as a lack of generosity, but a return to more normal patterns. I will say, our friends at Indiana University tend to say, if you've seen one recession, you've seen one recession. I think the same might be true of changes to the tax code, because we are seeing that the way that corporate charitable giving and individual charitable giving is going to be treated very differently in 26 than it will be in 25. Some donors may want to accelerate their giving in 25 and hold back in 26. For other donors, everyday households, the tax environment is going to be more beneficial in 26. So they may want to hold on to their giving this year and give it in 26. We can talk some more about that. And actually, I know that the Chronicle of Philanthropy will be coming out with an article in the coming week about that very topic as well. So let's talk about inflation. When we take a look at inflation, what we see is that it tends to be associated with recessions. These sort of yellow or gold shaded areas are times when we had above average inflation, so inflation greater than 4% per year. And you can see that that tends to align often with recessions, though surprisingly not in the last few years, where the recession happened in 2020. One quarter of 2020 was recessionary because of the effects of the pandemic. But oftentimes there's a correlation there between inflation and recession. But there is, again, there's not necessarily a correlation between high inflation, recession, and charitable giving. Charitable giving seems to be resilient through all of them. Now, one thing that Megan did mention that does affect charitable giving is on the next slide, and that is when we take a look at how charitable giving tends to relate to the stock market. And what you'll see is that if you take a look particularly at that green bar, because you'll see that there's a relationship between the red line, which is the S&P 500, and the green line, which is charitable giving in current dollars. Charitable giving isn't as volatile as the market. So it doesn't tend to decline as much as the market declines or grow as much as the market grows. It also has a lagging effect. So the effect on charitable giving tends to happen after the stock market influence. But the other thing that's important to remember is that the impact is really year over year performance of the market. So a mid-year swoon or a mid-year spike is not nearly as consequential as year over year performance. In part because, for example, foundations will base their giving on 5% of their portfolio's total value as they value it year over year. And so, when we saw the markets drop 40% early in 2020, that big down V that we see towards the right-hand side of this chart, we know that charitable giving did not decline with it. And when we take a look at this year, for example, where the market languished and was flat through April and into May, and now we've seen some growth. Will that continue for the rest of the year? Who knows? I will say that for some individual donors, there is some evidence that they begin to regain confidence. Megan referred to this, to feel prosperous again about 6 months after the market movement. And so the fact that the market began to climb again in roughly May means that we may have time to recover yet this year. Because we were asked once upon a time, we did chart giving against unemployment. So on the next chart, I will just touch on this very briefly, and that is that you see very little relationship between the movement of the charitable giving and the ups and downs of the levels of unemployment. Mostly that's because we've seen the outside influence of high net worth households. So in charitable giving economic terms, we define high net worth households as those with annual income of $200,000 a year or more and accumulated assets of $1 million or more, excluding the primary residence. So the house doesn't count, but have they accumulated $1 million otherwise? And because that description represents less than 5% of the American population, but 65% of the dollars that are given, they have an outsized influence and tend to be insulated from some of the negative impacts of unemployment. I'll just touch on a couple of things quickly then as we wrap this up. One is the socio-political environment. We're asked oftentimes whether or not presidential elections, for example, have an impact. And so when we take a look at that socio-political environment, I'll orient you to this slide as well. Once again, we see the green line is charitable giving in current dollars. The bars are charitable giving in inflation-adjusted dollars, and the red bars represent presidential election years. And what you will see is that there is no correlation between presidential elections and charitable giving. We're often asked if charitable giving goes down during presidential elections because of all of the fundraising that happens there. In fact, it doesn't. As Megan said, charitable giving in 24 was $592 billion. I think all of the political giving that occurred was less than $15 billion. Still a lot of money. But the other thing that we see is that there's a positive correlation between those who give to candidates or ballot issues and those who give to charitable causes. They're both pro-social behaviors. So just know that we tend not to see that having a negative impact. And then finally, before we turn it back over to JD for a conversation, I'll speak on the next slide. So that's all a story of resilience. That's good news. Charitable giving is resilient. But when we graph it next to GDP, and here it's that gray line that kind of gets lost behind the green line of current giving in current dollars, you'll see that it really hasn't outpaced the general growth of the economy. And I think that's something that we'd all like to influence. That's why the Generosity Commission is really focusing on how we can inspire more generosity in America. Each 0.1% of GDP increase translates into, in today's economy, 40 or $50 billion. And so it's hard to move the needle on this. People are working on it, but this is one slide where you might say, I'm not sure if it's resilient or stagnant, but let's all work together not to continue to divvy up the same pie, but to see if we can make a slightly larger pie. If you ask for these slides and we will make them available to you, I won't share it with you now, but because it was drilled into our heads by Giving USA, we always cite our sources, and so you'll find the sources as well. And you can email us if you'd like the slides, or you can download much of this information from our website as well. And with that, JD, I think we're going to take down the slides and get into a conversation.
So, with that said, wanted to make sure that we talked a little bit of logistics before we conclude. And of course, Laura, if there's anything else you want to say, jump in or anything like that. But let me just say this from a logistical standpoint. We're absolutely committed to keeping this conversation going, especially as information is coming in fast and furious, especially on the national level. We have a ton of resources that we've generated over the course of the past, well, really our 25-year history, but especially the last 6 months about all of this. We presented a lot of it to you today, but we have 4 or 5 other articles that some of it which may have been referred to during the breakouts, but if not, we're going to send all of that to you along with the recording of the public section of this, the first 30 minutes as a follow-up. And of course, as we're meeting with you frequently here, we're going to continue to talk about all of this or just call us directly. And with that, more to come from us, but for those that need to hop for your noon or whatever time zone you're on, thank you again, and we will see you all soon. Have a great rest of your day.